Following the cycle tracks of the Tour de France, IBTimes UK has come to Leeds, the commercial centre of West Yorkshire. We're here to find out what's going on with the housing market. The average price to buy a house in the UK is now £186,322, after jumping by 10.2% across the year, according to Halifax. Using the official ONS pay data, Halifax said this means the average house price is 5.02 times the annual earnings of a full-time male worker. This is up from 4.96 in June. But what's been going on in the north with housing, and how is the economic recovery faring in this respect? Andrew Latchmore, a commercial property partner at Schulman's, explains his thoughts on the matter.
In Leeds we had a lot of development going on pre-2009, and the recession stopped it in its tracks. So all the cranes were taken down and building sites were left in some cases half finished. This building, ironically, was the first building to be signed up as a new build, and this started in March 2013 for my firm, and this was finished in March of this year. And now, in the last 6 months, since January of this year, we've seen a real growth in confidence amongst the development fraternity and the banks that fund them.
A lot of activity that's taking place in the city, but the basis of that has been a lot of hard work between the public and the private sector during the recession to get us into this strong position that we're in today.
With a surge in house prices, there is a worry that the UK could be in the middle of a housing bubble. But are those fears justified? And if there is a bubble, has it floated up to the north?
In terms of people talking about housing bubbles, even in London at the moment we haven't seen what we would classify as a bubble. Clearly prices have been rising quite quickly. London has seen the greatest increase in prices over the last 12 to 18 months. In terms of outside of London, it's been much slower. The rate of activity in terms of purchases being completed has been low, and prices have been growing, but much lower kind of pace of growth than we've seen in London and the South East. So at this moment in time I don't think we have any fears that there's a housing bubble on the horizon. We're starting to see some early indications, some of the surveys of confidence, etc., showing that outside of London, people are starting to feel that confidence now to start purchasing maybe another house, whether it's first-time buyers wanting to move into the market, or some people looking to make that next step onto the ladder at last after a few years of feeling under a bit of pressure and not being sure whether now was the right time. So I think over the next 12 months we might start to see regions such as Yorkshire see a greater pace of house price growth, but certainly nothing that we would be worried about in terms of dangerous bubbles forming in the market.
With high house prices and sluggish wages, getting on the property ladder seems like a daunting task. IBTimes UK took to the streets to find out how the situation was affecting consumers.
Saving money to get a mortgage and get on the ladder, get a deposit down. It's not the actual pricing, it's the actual getting a mortgage that's hard. And it depends where you rent as well, really. I was renting in Nottingham, I've only just come back, so I was paying like £550 a month there. So, and I think here, if I wanted to live in Leeds, it's by myself, it'd be about £800 a month to rent. So it is a big. That's why I've moved back in, save a bit of money, and then think about moving out in about a year.
One way the government has helped out is the Help to Buy scheme. The Equity Loan Initiative makes it possible to get a mortgage for a new or existing home with just a 5% deposit. There were more than 27,000 properties bought using the Help to Buy equity loan in the scheme's first 15 months to the end of June, up more than 4,000 or 90% from the total as at the 31st of May. Of those, 85% were first-time buyers, according to official figures. But should the government be helping people get mortgages?
And I believe the government needs to be very careful before contemplating, for example, stopping the Help to Buy schemes, because the Help to Buy schemes are fundamentally underpinning the housing supply at the moment. A lot of house builders would tell you that a lot of their, a high proportion of their new sales are coming from helped by the Help to Buy scheme. And if you remove that scheme, what you could do is take us back to reducing the growth, and so that housing need would be growing and the house supply would not be matching it by even more than is presently the case.
But even for those on the ladder, the housing market post-financial crisis can still be tough.
seems to be a lot of tightening up by the banks on valuations, and we've lost the property because the bank wouldn't value it at what we hoped they would, so they wouldn't lend against it. So yeah, we're homeless in about 3 weeks and we haven't actually agreed terms on a new house yet, so yeah, a bit in limbo really.
The Bank of England has so far indicated it will raise historically low interest rates from 0.5% to 0.75% in early 2015. A modest rise, but what effect will this have on the north of England's property and housing markets?
I think Leeds is a resilient market, and I think it's important to remember that we have had historic lows of interest rates for some considerable time, so they are going to have to change. I think it's about them changing modestly and over time, so that the sensitive nature of the recovery that we have isn't undermined.
I think a modest rise, so we're talking the first increase will probably be 0.25%, so we'll be up to a Bank of England bank rate of 0.75%. I think that will have very minimal effect on the market. Clearly we're going to see maybe some change in mortgage pricing. Some organisations might start to increase their rates, some might choose not to pass all of that increase on. It's difficult to say exactly how it's going to have an effect, but I think the size of the increase we're talking about is quite small. I don't think it's going to be large enough to destroy complete confidence in the housing market. I think it's more of a sign from the Bank of England that things are starting to improve in the economy.
So, with the UK interest rate hike hovering in the horizon, will the North's housing market remain resilient? Only time will tell.